Good morning. Happy Monday. All right. Wide whippy ranges. Uh, Big volatility. It's not coming down here pre-market, or what happened overnight, I should say. We're getting into here to the day. And I think things have to calm down before any kind of meaningful move is going to happen. For right now, markets are just going to flip back and forth within last week's range. I'm just looking at the spiders here before we get to the futures, and prices are, after an overnight dip way down, well, not way down, but halfway into Friday's range. You see where I'm got my cursor right there, down below 380, and now they're right back up 384, past the close, but right up here. So basically going to open up the S&P anyway, just a little positive, so no big deal. And they got room to go up, but they've just run from this level all the way up here. That was Friday afternoon, and then the open and the dip coming up into that overnight gap fill anyway. It's going to be kind of tricky here this morning. It's got room to go all the way back up here, but it's unlikely to do that. It's common sense. It's unlikely to do that after running this race up into resistance. I would think it's going to pull in first thing in the morning. And if it can hang up here and jiggle around, maybe a continuation pattern, but ideally continuation patterns come on the first leg of the move, something like this. Sometimes it looks like a bottoming tail bar, but as we cover in MT Lives and we look at that screen of different candle patterns, one that says no matter what you call it, it's going up, which relates to it went down and it came back up again, and retracements. So a red bar completely reversed back up. It's a continuation type of a pattern. And now it's reached its destination up into this resistance area up here, which makes me think, hey, first thing at the open here, I think it could be a little tricky. We could see the momentum is slowing down where it blasted off here. Now the distance between the highs has gotten closer together. There's a topping tail bar. So some chop back and forth. Maybe this pre-market low right here comes into play as a buy. So that leads us to SPX today. And this might be one of the first days that I'm thinking, I'm not so sure. I may not be too sure until a little later on, because, well, I'd want to be above, let's go to SPX, above 3,900. And now that it's come up there, well, the premium has come up. Those 39.05 enough? It's an area there. So you got to decide. 39.10, you could do something at 39.10. It doesn't matter much how wide it is to get the premium. So take a look at that, 39.10 by even 39.30. We're going to say 38.60 is key gamma. I guess that's where things begin to accelerate. Well, lo and behold, it's just above Friday's high. And some resistance right over here. How far is it going to get? Well, that's the other key. I don't know if they address that and what's their next gamma level or whatever they might call it, McGraw. But and I said it's already run a bit of a race here. So, the way we look at things in a logical way is like, well, it's not like it's rattling around sideways there and then blast through a resistance level. It went from the bottom of the range to the top of the range to get to that level that they're talking about. So even if it can keep going, you got a pretty stiff resistance level up in here. So I think even if you're into the resistance level where, let's pop a little bit up, 39.10-ish, it's not going to get a heck of a lot further than that. So, and if it starts coming in a bit, well, then you got to make a decision in the moment. Anyway, so right now, 39.10 has some premium since things are popping up here a bit, and maybe 39.30. Consider that. On the downside, you want to let it drop. Well, let's see, 39. 800. You want to be below 3,800. Dude, there's just nothing below here, but oh, wow, there's some premium down there, 38.70. Considering where things are at here, I don't think they're going all the way back down, right? As much as you can think, whatever, what's possible or not, but you can go all the way down to even 37.45, 37.40. Yeah. Yep. I think so. Yeah. 37.40. And just pick your width. Yep. 37. I think, look, if it begins to drop at the open, the premium there is going to increase. You've got a significant support level there. After Friday's rally, where things are at pre-market, how things came back again. Even if it drops down there, the likelihood of buyers showing up aggressively again is good. So even though you're not below support, you've got a strong level there. So I think you'll be good there down at 37.40, right? We want to get as far away as possible. Sometimes we can't get below it, but common sense saying, hey, you know what? It's already up, rallied up into here. You got a big wide range bar. Buyers stepped up, here at 8 o'clock. I believe it would be okay because you're not going to go down here. Now, if this was opening down here this morning, that would not be a level that you'd want to play with. You'd want to be way down here. But since prices are up here and they're holding up, even they might poke a little bit higher before sellers start to show up again. I think it's very safe down there. All right, let's look at the other markets. There's the S&Ps. Buyers are stepping up here right into the open. 38, 60, 70 area up here. It's going to be resistance. It's already popped up. So we've got a bit of a trading range going on here. And so I'm not expecting too much. But 3,800 is support. Excuse me. You can see down here. We might just be stuck inside of here today. So if the market does pull back, we're talking 37.40 right now. This doesn't relate to, well, kind of does, SPX down at these levels. If things start to drop below 3,800, premiums will, depending on what time it happens, of course, premiums will increase down here and you could pick something else. All right. Okay. Qs, interestingly, this was down a whole bunch more, but this was down, what, about 150? S&Ps were up a bit. Wild, whippy, crazy kind of price action. It's what typically happens at turns or failure patterns like this. So came down to the support, the next level here. Maybe this is the low. I don't know. I mean, things historically tighten up before you get meaningful moves. So things are just, they're whippy here. Interesting. This went back down close to Friday's low, rather than the higher low that the S&P's made. Just peeking over here at the weekly chart. It's probably pulled back enough, and probably, trading down here, at least today, I think makes sense. And, what we look for as prices drop sharply, whether it's the futures, a market, a stock, and they begin to make a turn, the ideal scenario is to have 3 days, at least 3 days of building a support level, which you can see on the hourly here, begins to shape up like this, where you get away from resistance or it gets tested once, and that increases the probability of pushing up into the void above. So if things work out in that way, the markets will do it's chopping around, testing support, buyers showing up again, seeing that demand, and then something more meaningful happens after the daily chart builds up a little bit of a level. Yeah, so we may have a trading range really over the next, who knows, a month or so. Whereas no matter what happens here in the short term, coming down to test this low, even if we assume it goes down a little bit lower, you've got some significant support here. The likelihood is that, we're going to be in a trading range, a relatively wide trading range, maybe for the whole beginning of this year, as the markets digest, what preceded it, and interest rates going up. And we'll get to that, but they're down to a significant area, or bonds are down to a significant area of support. YM, wild. We will see in March. Yeah, YM has just been the wildest. We talked about this last week with the bottoming tail, the breakout, the down, the up, the down, and just such wide ranges. It's really insanity what's going on here. So good for intraday trading, not good at all for swing trading, not this pattern. So look elsewhere. Russell coming back, it's rolled over a bit. Major support is down here. So no real damage done, just a whippy, downward sloping corrective process. I'm not sure if Debbie would define this as her, what she's defined as what, an ass backwards wedge or something like that. She's called some patterns, kind of funny, but it's kind of like downward sloping, and it's got to make a pivot here, which will take a few days, but coming down to support here to make a higher low. See how that plays out. Ass backwards wedge. Yeah, something crazy like that, Joel. So bonds are down here. It's a significant support level here. Maybe they go a bit lower. Maybe they want to gravitate down toward that 150, as a whole number, which would put interest rates a bit higher. And if we do see those interest rates poke a bit higher, you can see they're up a little bit here, but coming off, this could be an M top. But if this should push up above this level here, and you want to have an alert set up there, because the market's going to take note of that if it happens. If it pushes up through here, that may be what motivates the market to sell off once more and test those lows or go a little bit below it. So no need to watch it. Set an alert and let the computer watch it. Yeah. And yeah, symbol here. You can use TBT as well. See, it's just jiggling around here, but either way, you're going to want to know if interest rates are moving up, since the market's focused on it. Oil's up at some resistance here. Maybe can tag $70, but it's had a hell of a run. Backing off here makes a whole lot of sense after a run like that. And so energy stocks might be susceptible to some corrective price action as well if you're in them or in the ETF. Gold continues to drift down toward its support level. See what happens when it gets there. Silver's been all over the place, but showing relative strength, just a big mess. And Friday was amazing for the transports. I mean, to have this kind of downward drop and come right back again just shows the underlying bias to buy the dip in the market and a lot of the stocks that are, whether it's airlines and, the ones that got decimated the worst, coming back with the coronavirus scare, I guess, coming near its end. Different states opening up, take your mask off, let's be normal again. And so those stocks continuing to get bought. And so this looks great. So, as far as market corrections go and how far it goes, with the yield curve the way it is, the internals are beginning to get to, I guess, more bullish levels for this market. Historically, this is nowhere near a bullish level, but these bands that I utilize that take into consideration or adjust for the markets, at least this is poked down below the first band. So any type of intraday sell-offs that might go into the end of the day, this could come down, but at least these are now in agreement based on the bands and this level coming down here. And Friday, you had good breath, with this poked up above 1500. So that's a positive. But the market, these erratic whippy ranges need to calm down. And yield curves. You're not going to get a bear market with yield curves that look like this. You get normal corrections, but you're not going to get, bear market corrections. That being said, in the letter I showed one stock now, NOW, there's a lot of stocks like that that are down 20% and some more. So market corrections are one thing. What happens in individual stocks, a whole nother. So yeah, I just showed the sentiment, Jake. So some put buying with you as the market was doing well on Friday. They kept buying puts. It's not above one, but this is what we want to see for, that there's some fear comes into the market. And even when the market went up, right, there was, hedging into the close, and there's an improvement. So there's been improvement with this corrective slop that's gone on where we got the, the sell signal up here. And so we just need to see things calm down a bit, maybe the middle of the month. Yeah. All yours, Dan.
Good morning. Yeah, I was thinking we were going to be range bound also. I don't know what the news was today other than with the markets down pre-market so big. And then the, Microsoft news. Well, Tether gave positive news, but Microsoft, Tepper gave good news, saying, hey, I think the bottom's in. Fed's going to go to sleep until Jackson Hole meeting. But Microsoft here was, I think, dragging down the market a little bit. They have a some sort of breach. They say 20,000 companies affected with their software breach. China's been hacking them since January, and they finally caught it. We actually have historically very light inventory here in the swing and options trader. We only have 6 open positions. We have 2 oils. 4 trades, this little OIS and RES. They both still look great. And NOV I have as a new trade today in the sector. This was the best looking one because it was a gap from consolidation. In the weekly options trader, we started nibbling on these put spreads on the sell-off. So I thought we were going to have, a bigger problem on our hands today with the gap down, but the amazing recovery where the Qs are still gapping down. We sold the 295 puts on Friday. So another $5 a cushion under here, or actually $3 a cushion. We did Google put spread. That's the best looking FANG in an uptrend. We did Netflix bounce here off support in the 200, and finally this ARC K. ARC K climactic buy set up here at the 200. And so those are the only. Yeah, Oliver. Yeah, I'm not sure what your question is on Google, but over yesterday's high could be a directional even. Had a bearish gap down and had no follow through. Well, had two gap downs actually, but it's holding up well. RCL and RCL, there's no pattern. I mean, you all got to ask me what your question is, because just telling me to look at this, I have no idea what you're asking. It's not a swing pattern. That's an M top, but it is breaking out as a day trade with a price void. And that's better, for that's better. I mean, you got 3 bars over here, so it's not a clear no void, but that's a potent 180 reversal. DFS, it's a mess. There's no compelling pattern there whatsoever. Yeah, McGraw, there's a lot of candidates for put spreads. IYT, as Greg mentioned, that's a put spread, and I did look. I was going to put this in the weekly, but the spreads are too wide. Diamonds is a candidate. I know Greg said stay away from it, but if you can get far enough away put spread, I got no problem with that. You asked earlier, McGraw, IWM. I don't know. GME on today's, yeah, GME I have here in the bottom right. Bottom right. This is, the one of the favorites of the Wall Street boys. We actually did a zero DTE trade on this on Friday. Worked out beautifully. Gapping up now over Friday's high. So yeah, it's a definite watch. Yeah, I love getting on the right side of those Reddit boys when the. All right, thanks, Oliver. PS, I posted in our Telegram the wide range igniting pre-market here. So it's gapping up to the high end of this range, but 30-minute high is an idea. That's another little oil stock. It's going to be too extended on the daily, but it's another one where the monthly has room. The 10, 11 bucks. But again, I still like the setup of that NOV the best. Q 1371, gap and resistance. It was up higher earlier. AER 5650, gaps big. Had a nice little bear sandwich there on the monthly, but the gap's too big now. NYTE got some positive mention in Barron's. 2954, you'd need a pullback. Colette, I don't use POS for scanning, so Let's asking if anybody has a 123 scanner. All right, so GME we talked about. ATH was up more coming in. Daily, weekly, monthly are bullish. I mean, you can see how it trades. You got to give it a wide stop, but ATH looks higher. And Disney, I thought it would be up today just because of the nonsense public being programmed that, oh, Disneyland's opening, so let me gap up Disney. And it also had a movie. The journal said the movie that came out was below expectations, though, but whatever. It's a nice bullish gap here. So that's a put spread idea, McGraw. Lemonade got an upgrade. That's a put spread idea. Let's watch it over Friday's high. You can set an alarm. Microsoft we talked about, but look at that, only down 20 cents now. It was down 250 this morning. You would think they would punish it more, but guess not. GE was in the paper. They're talking about some $30 billion spinoff of a jet engine company. 9 gapping down. There's no pattern there. Wow, look at that. That's a trading range. That would be a condor candidate, but you aren't gonna have anything good there on a $3 stock. XPEV had earnings. Wow, that's a nasty decline right there. And that all started with this little breakout failure. That's a power trend right there. MK, this was a long idea in the advisory letter, so 5-minute high looks fine. Nice pattern. I'm gonna put this in Wednesday's MT Live. We're gonna be talking about the turn. This was a one bar turn, a gap negated, then it was a 1, 2, 3 that triggered. Then Friday downside shakeout, range expansion, and a price void. So that's a nice pattern.
ICE. I mean, swing
Nice.
long, and maybe it consolidates today, but it's
Yeah,
probably,
it's
I don't know if
also
there's any premium for a put spread, Dan, but probably a debit spread. You can get going, or just a
yes.
directional.
All right, I'll watch it, but yeah, it is a put spread in the weekend letter. I was telling Greg over the weekend that scanning, there's a lot of bullish patterns out there, even though the broader markets are a mess. This was one of them. Orly is in there. Look at that. These companies, the cars, AutoNation. Look at that bar on Friday. Where did that come from? But all the car parts are GPC. Look at that thing, all-time highs. Oh, Joe, is GNMK turning? Look at GME going here. Like GPS was mentioned in Barron's, that looks higher. Hey, these GME, yeah, 5-minute high on GNMK as a go.